Hello everyone, this is January 2nd, 2023, and this is perfect time to review what happened in financial markets and in the world as a whole. Now we have quite limited time, so of course I will go into little specifics about each market. I have done it into previous videos, but here will be more of conclusions and general themes, what happened last year and how it impacted markets. Now, first things first, if you haven't been living under the rock, you know that at 24th of February 2022, war in Ukraine started, and it had profound impacts on political, social, and economic life. As you might know, there was quite a lot of turmoils about Russia's impact on the world and unprecedented sanctions that was imposed by Western governments. And well, as you remember, many thought that financial markets would collapse and there would be massive shortages of food, energy resources, and whatever. But let's see how these impacts had on general markets, and let's see euro against dollar, because this is the market which reflects strength of dollar very well. And as you might see that if we start at January 22, dollar rose pretty steadily against all currency pairs, and this example against euro as well, because of course there was global instabilities and everyone flocked into safe haven assets, and dollar is chief safe haven asset. And that was even due to the fact that actually there was high inflation, which is theoretically negative for currencies. And yes, and there was a lot of issues about Fed's ability to contain inflation, but nevertheless all central banks was doing the same thing. They were fighting against inflation and raising interest rates, and Federal Reserve was only one of them. So despite their aggressive tightening monetary policy, they went pretty good at increasing strength of dollar. Now, whether it's good or bad, it depends on which side of economy you are. You are producing something, you are consumer, you are lender, you are renting something. That will make difference whether you are at the right or wrong side of the equation. So there is no definitive good or bad answer against strength for dollar. Now let's continue this thread and look at interest rates as well, because interest rates are kind of tied to strength of currencies, because monetary policy is mainly driven due to raising or decreasing interest rates and open market monetary policies. So, and with that said, what we can see, yes, we could see that interest rate hikes work, because 10-year government yields has risen from 0.6% to 4% at late 2022, and now they have fluctuated around that number for last month. So this is pretty unprecedented for last decades, because we have been accustomed to extremely low interest rates, but now they are not high, they are more closely to the levels which they were at historical points. So this is, I would say, this is something which one could expect, because we cannot print money forever, so interest rates has to rise, and they are rising across all currencies, all governments, and all interest rates products, whether it's in Europe, United Kingdom, or United States. So I would say this is more back to normal than something unprecedented. And if someone is crying that it will destroy economy, well, most likely because their business models are relying on extremely cheap interest rates, and this is not the way how to make sustainable businesses. So let's go to more interesting assets, and that's oil. Well, Russia is major commodity and in particular energy commodities exporter. This is natural gas, this is oil, and these are oil products. So one might think that oil prices have to go to, I don't know, like $400 per barrel, because Russia is sanctioned and put out of their export markets, which is namely Europe. This is where they export most of their oil, natural gas, and oil products. And it might seem that in early 2022, when oil spiked to $130, but here's the thing, markets adjusted, and actually they are precisely at the same level as they were a year before. So if you wouldn't know that there is war in Ukraine and Russia's economy is tarnished, you wouldn't, well, you wouldn't think there is nothing much happening in oil markets, because they are at the same levels. Yes, they made one spike, but then they gradually decreased to previous levels. Very nice for traders actually. And this is most interesting. Not most interesting for traders, this is understandable, because we have global liquid markets which could readjust, and they readjusted, and those who didn't listen to panics and doomsday sayers, they were better off with that. And now let's go to S&P 500. Well, this is more interesting because it was one of the worst years for S&P in, I think, like since 2008, because all those previous years central banks were supporting equity markets, and S&P 500 was one of the chief benefactors. And now when interest rates are hiking and it's not that easy to refinance companies' debts, repurchase shares, or simply make easy money out of cheap interest rates, that's reflecting to share prices as well. And we see that markets fell from 4,700 to like 3,800, so it's roughly 20% decrease. Well, we have been climbing steadily since 2009, and even with the COVID collapse we managed to get out pretty well because of the central bank's support and unprecedented government spending. So I also think this was kind of expected, because we still are at very high levels in stock markets. There is nothing that particularly troublesome here. Maybe it's a bit worse with the tech sector, but overall S&P 500 is, I would say, behaving adequately in context of historical levels and historical fluctuations. This is now 1929, so correction is here, but we have to be ready for more turbulence, because as I told you, we are on high levels. And now we are at our favorite market, Bitcoin. Well, everyone was hyping Bitcoin and telling that it will change the world in late 2021 when it was around 60,000. That was in November, and now it was around 46,000 and early 22. And what do you think happened? Reality check happened. It went from late 40,000s to 16,000s, and it's effectively staying flat. One might say since November, but actually I would say since June. And who knows, maybe it will stay there for next couple of years. I wouldn't know. I wouldn't try to predict Bitcoin markets, and I certainly wouldn't try to overestimate its importance. Well, it's a speculative asset. Maybe it will rise, maybe it will fall, who knows. But for traders it has produced good trends, and who knows, maybe it will do it in the future. So this is my short conclusions of markets in 2022. Now what we could see: yes, it wasn't the best time for investors, but it was extremely good time for trend followers. And I would think, I don't have any clue what markets will bring next year. I'm open to everything. Doesn't matter, well, whether either of these markets, S&P 500, energy markets, cryptocurrency markets, currency markets, or interest rates will spike or collapse. Doesn't matter. What's important is how you are prepared to those low probability eventualities, and how would you play them out. That's most important, whether you're a trader, investor, or whatever. Your ability to be prepared for any possible eventualities, and your ability to capitalize on that. Once you change that mindset from trying to predict and forecast to reacting on everything that happens, well, your results will increase tremendously. And with that said, let's be open to new possibilities. Let's hope something interesting and unexpected happens, and let's try to capitalize on that. So stay tuned, follow me, and bye.